delaying retirement, the underemployed waiting for openings. How and when is this 7.7% rate going to come down?
Well, certainly sooner than the Bank of England think it will. They have a forecast of late 2016. I think it's very likely to happen before that. I think we've still probably got another 18 months, couple of years before we hit 7% though, both because older workers are delaying retirement, because of those underemployed workers that you talk about, mean that we need pretty strong growth in the economy and pretty decent employment momentum to absorb all these extra workers. So I think a couple of years, but definitely sooner than the Bank of England thinks.
Okay, so the Carney didn't choose the wrong metric.
I don't think he chose the wrong metric. I mean, it doesn't mean it's going to behave for him in the way that he wants. I mean, forecasting unemployment is just like forecasting anything else. There are going to be errors there and judgments that are wrong. I mean, I think the Bank of England took some pretty extreme positions and judgments to get their forecast out to late 2016 for hitting this threshold. I think that was the mistake, not picking unemployment.
You talk about a solid recovery in your note. How solid is it? What are we going to look at? What are we looking at for this year and next?
Well, for this year, I've got 1.5% growth. For next year, 2.5%. Quarterly growth towards the end of this year, Q3, Q4, running about 0.8 quarter on quarter, slowing to about 0.5% a quarter in the new year. As you say, one key thing in the labour market data today was weak average earnings growth. It rose only 0.7% year on year, and that's putting a lot of pressure on consumers' budgets, and they are the only source of demand right now.
When's that going to come back, do you think?
Well, I think spending power will start to return in the second half of next year. We will see inflation coming down, pay starting to go up. It's not going to be any sudden explosion of pay growth, I don't think, but a modest increase which will help the consumers.
You said 2.5% for next year. I think the consensus is 2%, so you're quite a bit above. You look at the PMIs, at what, 60, 60.2 for services. They are way ahead of themselves, surely.
I think so. I mean, 60 on a PMI would be looking at 4 to 5% annualised growth, and I think that's going to be pretty hard to achieve with households' real pay still falling. I think firms themselves are probably a little bit more cautious than that, so I think we'll see pretty strong growth, but not 4 or 5% annualised.
Retail sales tomorrow, right?
That's right.
What are your expectations?
I'm expecting, broadly the same year-on-year growth as we saw last month. I think, again, as with some of these indicators over the summer, like pay picking up into Q2, PMIs picking up into Q3, I think we'll start to see a little bit of cooling as we head to the end of the year. And I find it hard to believe retail sales can keep rising 4% year-on-year when